Talk to us about this deal and what more we heard from the World Bank president.
Hi, Jen. So what we know is several players will be pulling into this kit, including the Africa Development Bank, including IMF, and also some private sources. And the goal here is that in exchange for this funding, governments will be able to change their legislation and create a more favorable environment for external investment to be able to flow into these countries and develop the kind of infrastructure that is needed. And just to contextualize the magnitude of this problem, the World Bank estimates that 570 million people across sub-Saharan Africa do not have access to electricity. And if we just map that in terms of countries, you have Burundi, Chad, Malawi, South Sudan, where access to electricity is less than 20%. If you look at regions, West Africa, 42%, but rural areas is 8%. And the irony of this, or the contradiction, is that these are countries that have so much potential when it comes to solar, when it comes to wind or hydropower generation, but there are glaring gaps in infrastructure and finance. And we're now hearing the World Bank saying that at least $115 billion will be needed to go into development and increasing access to electricity with solutions such as mini-grid and solar home systems.
Yeah, and Ndiro, of that 570, of course, a majority of the people who do not have electricity in the world are concentrated here in sub-Saharan Africa. How significant do you see this project being then?
It's going to be very significant because, Jen, if you look at access to energy, if you don't have it, it impedes a couple of things. It impedes economic growth, it impedes employment, and it also limits investment. The Africa Development Bank estimates that Africa loses up to 2 to 4% of GDP growth annually due to lack of access to energy. McKinsey's further puts it into context in countries like Ghana and Tanzania, where companies lose up to 15% of sale value because of inaccess to energy. And these businesses are now opting for alternative solutions like diesel and petrol, which tend to be 40% more expensive. But if we just personalize it for a bit, people are losing out on education, missing out on healthcare, missing out on jobs. And this is a demographic, like you mentioned in the beginning, where 70% of its people are under 30 years old. And in 10 to 20 years, you have an educated labor force that is devoid of hope and opportunities, and it opens the door to immigration. For a region that is on the cusp of economic development, brain drain is quite a costly price to pay. Hence, this investment is really going to be impactful.